Good morning and welcome to the Orlando Real Estate Buzz. I'm Brendan Rendo with the Homes in Orlando team, joined as always by Joseph Dion, who got kicked out of his house with all the kids home from the hurricane.
It's okay. I found a place to work. They might not like it, but at least I get coffee.
You know what? I think we're going to show that right now, Joe's not a bad time to go searching for a new house. It's really not.
Nope. It really isn't. It's interesting, right?
Yeah.
Like we got to do a little bit more than just dodge a storm. We got to dodge some economic pieces too.
Yeah. I mean, the big news really this week was consumer confidence index came out, and it took the biggest plunge it's taken in nearly 3 years.
Which, I mean, if you think about that, that puts us back to 2021, which that means it's lower. Consumer confidence is lower than when rates were going up in 2022, when they were going up in 2023. Like, this is craziness. Like, why is it so? What happened?
I think it's all the news that we've been seeing, that we've been talking about. We talk about every week is higher rates. People don't feel like they can afford anything. Inflation is crushing everybody right now. And how many more layoffs announcements have we seen recently? I mean, the owner of Chrysler, they're got a huge one coming for auto workers, and there's just numerous layoffs. Best Buy is closing down stores again. Yep. They're going to be shutting stores. So when you're sitting here and you're not seeing a lot of good economic news, your confidence weighs. You tighten your belt. You don't go out spending things that you're spending, and look at all the sales that are going on right now as well. I mean, everything's on sale, and I think we're seeing it in the especially in the housing market as well. I mean, we got that great news last week, of the Fed rate cuts. But what's happened? And we told people this was going to happen.
We expected, it doesn't matter. Like, if Feds cut rates, like, we knew they were going to cut rates a month, 2 months beforehand. So the market's all adjusted back down for the rate cut. And then once the rate cut happens, they sit there and go, okay, what's going to happen in the economy outside of mortgages? Like, we already adjusted everything. What's going to happen outside of that? And what happened? Consumer confidence wanes. We've got this, but guess what? Stock market's still skyrocketing. Like, we've got the lowest consumer confidence, but I believe SPY opened at an all-time high today.
The logic isn't. It's just not making sense. I mean, I know we've mentioned it several times that a lot of people tend to sit on the sidelines until after the presidential election, right? Yep. But I'm telling my buyers in the next month, if you got a chance, jump in because it's a buyer's market. And wait till you see the numbers for Orlando this past week. It's horrible. It's absolutely horrible, the number of sales that are. And here's the information for August for home sales. Home sales dropped again, but as new prices set a record. And I hate these headlines because it's so misleading. Why are the prices setting a new record? It's because everyone on the lower level of income can't afford to buy a house. That's why. Yeah. The people who can afford to buy the houses are the higher incomes. People who have had houses have the equity in those houses, so they can sell their house, make $250,000, $300,000, and be able to go buy a little bit bigger house. Yep. That's why the prices are going up. Because
the crazy part is, like you said, wait,
what?
You take 250, 300, right? Like, you take it 250, 300,000. That's just getting you a small upgrade now, right? Like, the move-up house isn't what it used to be. Like, used to be, you go up to 300,000, you're going from maybe a 4.2 to, maybe a 6.4. You've got, acreage, you've got high-end luxury. Now it's like 200,000-300,000. Like, I looked at it the other day, my house I bought, I could sell it for almost 300,000 more than what I paid for. and that's like what I could sell it for today. I would have been like, I'm going to buy a McMansion 10 years ago.
Yep. But we've talked a little about this before, is because your kids are getting older and need a little more space. But what you would have to spend to get what you want dwarfs what you would make.
Yeah,
and I bet you even with your discount, your mortgage is going to double.
It's oh yeah, 100%. And what's crazy is, like, they talked about conforming loan limits, right? Like, home prices continue to set anew, so the conforming loan limits, which we can lend on already, there's a lot of little magic back and forth happening, but they're going up to over 800,000 for the conforming loan limits. I mean, I remember in 2016, like when they crossed 400,000, we were like, oh my gosh.
Okay, here's my age. I remember when they crossed 250 and we went nuts. We were sitting waiting for the announcement, and they went to like 252, and everybody was like, yes.
You thought the world was going to change.
Yeah. And it's what's so funny is every time the loan limits change, especially FHA, you ever notice that's exactly where the builders sell their houses at?
Every time.
It's amazing how it goes up to exactly work out the numbers so that someone can buy the house through an FHA.
Yep. Mm-hmm.
It's just unbelievable. Yeah.
But it is interesting, and I looked at a history on it. This kind of jokes. 417,000 is where the conforming loan limit was at in 2016. It was there in 2006 was when it moved to 417,000. So it sat there for 10 plus years, and since 2016, it has essentially doubled.
That's unbelievable.
Craziness.
But going back to the buyers, this is why I'm telling my buyers right now, take advantage. Is homes are staying on the market longer than 60 days on average. And looking at prices, looking at listings, people still have that mentality that they're going to get a certain amount for their house.
Yeah.
And it's like, no, it's not going to happen. And you're seeing everyone do price cuts now. I mean, my gosh, 2021, 2022, you would see people do price increases after 5 days on the market because they had so many people looking at the houses.
Yeah.
Nobody's looking at houses. Showtime comes out monthly with their numbers, and showings are down well over 50% from last year. No one's going out. No one's looking at houses. I've got several listings that my clients are like, "How come we're only getting this many showings?" It's just like it. Unfortunately, it's the market now. We have to adjust our whole philosophy of how we're approaching the market. And what is reality? Reality is we've got a much smaller buyer pool than we've had in years. And honestly, I think right now, unless rates, we've dropped the rates have come down, but we still need another half a point. It is not. We have not seen the increase that a lot of people thought we'd see with the rates dropping. You're in the about 6.5 right now on a conventional.
Yeah, right in that, and that's the crazy part is like we stop, but it's because when we talk about it, we've been doing these podcasts, these weekly updates. We've been doing them for years now, and we talked about the magic number being at 6.5 to 6, right? Mm-hmm. But that was you got to go back, like that was our conversation a year ago or a year and a half ago. Well, home prices are up 5% since a year and a half ago. So that number needs to be it's continuing to push a little bit further down because the prices have continued to go up. So that comfortable payment, it hasn't changed. People aren't making a lot more. Like the income hasn't increased 5% year over year. So like they're not wanting to spend 5% more in monthly payment to get that home. Right. So we have to see that balance back. So now I think to see with prices where they are, I really think if we're seeing the model, like rates start to come down, I think we need to see the rates in the mid 5s now. It's just where I think we need to be. And I think in the next year, I think we can touch, I think there's potentially we touch the high 4s again within the next year, some point, but it might settle in around 5.25, 5.5 is where I think we'll probably settle in within the next 12 to 18 months.
Yeah, I mean, just looking at the economy, looking at what's going on, you cut rates. Fed cuts rates when the economy is slowing down, and everything is pointing the economy is slowing down. And when you've got one of the biggest sectors, housing, coming to a standstill, literally a standstill, you've got to cut the rates. You got to cut the rates. I mean, my gosh, you see what's going on in China this week. China has announced several infusions of funds. Basically, they're printing their money to help save their housing. So we're going to end up, hopefully just cutting, not printing again. You know what I mean?
Yes, I would rather the cut. Like, the printing created the mess, I think. And the challenge that we have right now is we talk about interest rates, and they're not a direct correlation, right? Like, but I always tell people that aren't really in tune with, like, when I talk to a lot of realtors that don't know, or economics, or just consumers in general, I said the very basic way to look at things is if short-term things that don't need to lock up your money for long periods of time are going up, like the stock market, then typically your long-term assets like mortgage-backed securities need to go up higher as well, so that it creates interest in it. Well, stock market's still hitting all-time highs. It's still going ballistic. So, like, the fact that rates have gone down, it can't go down any further because they have to have people that are willing to buy. And we've got some buyers in this marketplace right now because of the fear and uncertainty. But the key is like, let's look at simple economics. If you put $1,000 in the S&P 500 a year ago, you'd have $1,350. It's up 35% year over year. Like, where would you put the money? Like, if you were investing, where would you put your money? God, I'm an idiot because I didn't put more money over there. Right? Like, I'll be real. Like, but that's the hard part is, like, nothing shows why it could continue to go that way, but it is. And if you can lock up something and pull it out tomorrow, like, so you only lock it up for a minute or a day or an hour, like, you're going to go that route. So I think that's what we're dealing with is we've got the economic pressures. We have some uncertainty. We don't know, but the market's still going up. And then you got the housing market. It's craziness right now. Like, it is coming to, I mean, I have never, like, I don't know if it's been this much of a standstill, like, outside of a month or two during COVID or back in 2008-9, like, we might have had more monthly sales in 8-9 than we do now.
We did. We actually did. But we also had the short sales that a lot of people were taking advantage of.
Yeah.
We don't have those yet.
Yeah. Everybody's got equity right now.
Yeah. Well, here's
not everybody.
I mean, look what's going on currently with the new construction inventory. Is we are at the highest level since 2009 of new construction homes available.
Wow,
I mean, the inventory is just continuing to grow.
But
number of units, we are straight up.
So we're at the highest level, but we still have a housing shortage?
Yeah, we have a housing affordability shortage. Because you look at what most of these houses are being built at and the prices they're being built at. I mean, it's amazing because all the builders are offering mortgage rates, locking in a 30-year loan now at 3.99, 4.5%, and the houses still aren't moving. Their sales are still in the doldrums. They're still not moving. So we are starting to see some really big price cuts from the home builders for the first time. And I saw one last week. The development, I know it's only about halfway done. They dropped on two of their move-in ready $100,000. And I'm thinking, holy cow, the person who just closed his house last month has got to be freaking out.
Yeah.
Because you just lost $100,000 of equity the minute this thing sells.
Yep.
And we're seeing it all over Central Florida right now. We're seeing price cuts, special rate programs, give what they call flex money. They're giving $25,000, $50,000 in flex money. I mean, just hand over the house is what you feel like.
So,
You know,
so the short sale opportunity. So we're going to see a lot of short sales, and it sounds like those short sales are really going to be the new build communities.
it will be. I really
It
think
won't be the existing communities.
yeah, in the 6 to 12 next 6 to 12 months, we're going to start seeing short sales pop up, and we're going to see them in the new communities. I've actually got one right now out in Lake Wales. Gentleman bought new construction. They're still building. The new builds are 340 to 350. We're short selling at 285. But you know what the incredible part is? It's not selling. It's not selling. I can't believe we don't have like people lined up looking at
Do you have an
going, oh
approval
my
on
gosh,
it
I'm
already?
getting off 285 as opposed to spending 330 to 350,000 on a new house. And it's 2 years old. 2 years old. And we're not getting showings. I don't understand it. I'm like, that doesn't make sense to me at all. But you wonder why consumer confidence is draining. This is it. I mean, you got Jamie Dimon, CEO of the largest bank in the world, and he's saying right now that we've got a 65% chance of a U.S. recession. And I kind of agree with him. I still think we have a very solid chance for recession. And it's one of those where you're watching, and again, you see all these layoffs, all this news coming out that it's going to be going into the new year. I think we're gonna see some really, really difficult economic numbers come out. And then when we get into our Fed watch that we watch every week, we've jumped to about 56% chance that the Fed's going to cut another quarter of a point come November. And at this point, I think they will. I think they will, simply because the numbers keep moving in the wrong direction.
Yeah.
There's nothing showing real strength in the U.S. economy. I mean, I hate to say it, but the only thing I know that's propping up the U.S. economy right now is government spending. Because our government spending has gone out the wazoo. And if you take out our government spending, our GDP drops like 2.5%. So basically we're flat. If we drop our government spending. So there's a lot of stuff out there right now. It's not positive information. And I'm just looking at the
mask. I don't know.
Yeah. But if you're in position, I just think as a buyer, man, go in and beat the hell out of these people. Take advantage of it. I mean, I've got one client right now that we're looking at one that house has actually been served list pendants back in April. Called to check about sale date. They don't have a sale date yet. I think it's because it's listed. We know exactly what they owe and how much work needs to be done, and no one's going to look at it. We actually go in and check every day if there's any showings on the house. So we're not seeing any showings. So we're actually sitting right now watching, like, when's the right time to pounce? When's the right time to make that offer? Because when we make that offer, it's going to be aggressive. It's not going to be anything. They're going to shake their head, but we're going to be the only ones that are going to be there making an offer. It becomes a point of, okay, do you sell, make a little bit of profit, or do I lose the house in a foreclosure sale?
Yep.
And we're sitting there, we're watching, and that's one of the hardest things I always have teaching my clients is, because everyone's so used to everything going so quickly. Now it's okay. We need a little bit of patience, bit of patience, and that little bit of patience is going to save you a lot of money.
Yep,
it really is. So let's hop in. Let's look at these numbers for Orlando this past week, and this kind of hurt a little bit. So we were at only 387 sales.
That's bad.
That's it.
I thought last week was bad at 405.
Yeah, I mean, this month has just been horrid. Inventory popped up a little bit, but look at our condos. We're barely breaking 100 condo sales on a weekly basis right now in Orlando.
Ooh.
That is unbelievable. You think of how many condos we have, not just downtown. Altamont Springs has a ton of them, but you think of all of the Disney area.
Yeah.
Disney's numbers, the vacation numbers, are all in those numbers.
Yep.
So that's telling me nobody in the vacation rental area is selling their condos.
Yep.
And you're seeing huge price cuts in that area as well.
Mm-hmm.
Then look at our months of inventory. We're shooting up on our months of inventory. We're now to 4.5 months of inventory. And then original list price to sales price, we're still holding it at 94% overall. So there's room in all these houses to move and be aggressive.
Mm-hmm.
Find ways to take advantage and, get some closing cost contribution and buy down your rate. It's a great thing to do right now. Average days on market, 53. That's right in the national average right now. And now when this is it graphically, look at this graph. I mean, it's actually, if you look from basically July, it's a downward progression.
Yeah.
In the sales in Orlando.
Mm-hmm.
It's moving in the wrong direction consistently. And then our inventory, we're up nearly 40%. So there's more houses on the market.
Yep,
Again, more opportunities, but people aren't looking. No, everyone's sitting on the sidelines. There's just go back to that consumer confidence number. It's not there. There's no confidence. And if people don't have confidence, they're not going to go look at houses because they're not sure. Are we going to have a house? Are we going to have a job in 6 months? My company's kind of like hemming and hawing on some things, making some changes. So just that loss of confidence is one reason why we're growing our inventory.
Mm-hmm.
Then we get into the condos. I mean, look at this. 8.6 months worth of condo inventory. That's huge. If you are a buyer and you're looking at a condo right now, holy cow. Because the nice thing with condos is if you're in a complex, generally they all kind of look the same. If you got a 2-2, the layouts are pretty much the same. You can play all of them against each other.
Oh, yeah.
You can play them all against each other and just negotiate down a great deal. Well, I can get this one for this. I can get this one for that. Well, mine has granite countertops. Whoopie-doo. Not a big change. So this is a market that if you're in it, there's a lot of opportunities to take advantage of this big of an inventory. 8.6 months of inventory. And look at our average days on market, 73. This stuff's staying. People get nervous. It goes over 30 days now. People get nervous. Sellers get nervous when it goes over 30 days. And you're down to 93% on the original list to sales price. And look at this. Ooh, ouch. It's a ski slope. Woo!
Straight down.
Yep. I mean, that is incredible. And I don't expect this to change over the next month, 2 months. At all.
No, I really don't.
So, I mean, the numbers are just, overall, the Orlando numbers are just dismal. I mean, straight up, absolutely dismal.
Mm-hmm.
And I think the only thing that can really help us going forward is to get things pumping again is, hate to say it, we are going to have some more rate cuts. We're going to have to get that down to about 5.5%. I think for this time we'll see the market pop back up, and I just need some good news in the economy. You know,
Yeah.
we need some good news, something besides the stock market going up. Some of the fundamentals have to change. We've got to see those items change. You know, inflation's got a whole inflation's. I mean, 3% is not a target. You know that we're really looking for. We got to get that number back down under the 2%. So because it's just people. I mean, it's just horrible going to the grocery store these days. So, well, anyways, that's
just real quick. I saw the GDP numbers came in today, 3%. Right where they estimated. Durable goods was actually, they thought durable goods was going to decline, and it came in at 0 month over month for August. And then core durable goods actually increased. So it's that story on the economy where these monthly reports that keep on hitting are painting a different picture than what we're feeling.
Yeah, I don't. But goes back to the old revision. Wait till the revisions come out. That's the that's always buried on what was it, the old page they used to bury the retractions on page 5 in the New York Post.
Well, it's like the job creation numbers where they came back and they did the annual revision a couple weeks back, and it was like it was determined that there was 990,000 jobs that were said to be created over the last year that never were created. And I was like, well, that changes things.
Yep.
That's a big adjustment. That's after you revise month over month, and then they still went even further.
Well, it's amazing what you can do when you're the person controlling the numbers. All right. Well, thank you for joining us this morning. And as always, please like, subscribe, and join us every Thursday morning on the Orlando Real Estate Buzz. Look forward to seeing you next Thursday. Take care.